I'm just looking at the names of the panelists that we're going to have today, and I don't think they need much of an introduction. So I would like to invite them onto the stage to discuss what is quite a serious topic, but at the same time can be a lot of fun, because for a lot of entrepreneurs, this is the dream. This is where you want to take your company, and it's very interesting to hear the stories from our panelists today. So let's start with, I think they're busy checking their phones to see who's using Anghami and who isn't, but Mr. Elie Habib. Co-founder and CTO at Anghami, welcome.
Thank you, thank you. Thank you for having me.
It's our pleasure. Mr. Youssef Salem, CFO at SWvl. Welcome, Youssef.
Thank you so much. Thanks for having me.
And His Excellency, Dr. Nabeel Koshak.
Thank you.
CEO and board member at Saudi Ventures Capital Company, also known as CVC. SVC, pardon me. Okay,
Yes.
Gentlemen, thank you very much for taking the time to be here with us today.
It's an honor, thank you.
It's always so much fun to be at this conference because there's so much energy. And personally,
yeah, seeing people.
to see people,
finally.
I know, to see
Thank
people,
you for
this
being
is
here.
amazing. So, Youssef, I thought maybe we can start off with you because considering your background, you've worked in investment banking, so you're very familiar with the overall IPO landscape.
Yeah.
Currently, you're at SWvl, and as we all know, you're going through that IPO process, but through a SPAC route. So what can you tell the audience about the differences between IPOs and SPACs, and what are some of those pros and cons that they need to consider?
For sure. So there are three fundamental advantages for a SPAC compared to an IPO. One is you get the capital certainty, at least partially, much earlier, because unlike an IPO where you run through the entire regulatory and marketing process, and then you only open the book towards the back end, and only then you know how much capital you're going to get and how much valuation you're going to get. In the SPAC, you actually start with agreeing the business combination with a sponsor, where you get definition over the valuation much earlier on, and you also get the PIPE, which is the fully committed part of the deal, much earlier, and then you go through the full regulatory process, etc. So that certainty over valuation and capital quantum is much faster. Second is you also are working with a sponsor, so you're not going alone. So if, for example, like in the example of SWvl, the people in the US do not necessarily have familiarity because we're not operational on the ground, we don't have buses in the US, they're not necessarily familiar with the brand. Being able to almost have a conduit via the sponsor to work with, especially in our case where the sponsor is actually strategic in the space, so they can also add value. That's kind of a second big advantage. And the third is in the SPAC, you're able to actually share a full financial projections, unlike an IPO where you rely more on historical information plus some limited guidance, and the ability to share projections means that you can actually tell the story much more than you can do on IPO. On the other hand, you have two main disadvantages. One is the sponsor promote. So effectively 20% of the SPAC is quote unquote free money that the sponsor is getting without putting in cash. That 20% of the SPAC translates, for example, into 6% of the company. That is diluting you as a company and shareholders without actual cash coming in. And second is there is an element, especially now, of skepticism around SPACs in the market in general because of the number of pre-revenue companies and other speculative plays that have gone via SPACs. And that's why now when you're engaging with investors, if you're a SPAC, there is already this a little bit of reluctance vis-a-vis being a more classic IPO.
So would you agree because a lot of times we hear about companies preferring to go down the SPAC route versus an IPO because they consider it to be faster and maybe a cheaper way of raising funds or going public. Going through the process now, do you agree that this is a faster route? Because obviously there's a lot more, generally you would say, fine, you don't have those applications to become the public listed company because you're going through that merger and the SPAC is already listed essentially. But how has your experience been so far with SWvl, and do you agree with that?
So it is partially faster. It is faster to get to the first milestone, which is announcing the deal, getting certainty over valuation, getting certainty over part of the capital, getting the visibility, getting going on hiring talent, doing M&A, using the public currency. But the end-to-end process at the end is still going to take you close to kind of 9 to 12 months, which is not very different from an IPO timeline. So partially faster, but not the overall process. Cheaper, again, yes and no. Sub part of it is cheaper in terms of certain elements of the process, and the fees and the expenses can be less. But then so from a cash perspective, it can end up being a bit cheaper. But you obviously have the dilution of the sponsor, that 20% of the SPAC we talked about. So from an overall value perspective, it's not necessarily cheaper as an overall value pot.
Elie is already nodding because he totally agrees.
No, because I think there's a lot of things that says about what is a SPAC and whatever. A SPAC is neither cheaper, it's not cheaper and takes probably more time, and it's much more complicated post Trump. Because the SEC put in much stricter rules, but they're great for us, right? I mean, those rules allowed us to list when there are tons of companies who are not continuing the SPAC, who are closing their IPOs, who are reverting back to private. So companies that quote unquote graduate from the colonoscopy of the SEC are good companies right now. Before, earlier on, it was kind of list. So yeah, we had different expectations before, and plus we finished the SPAC. So we listed on 3 Feb, so it's been 20 days or plus or minus, and we did go throughout all of it. It's like the ups and downs and understanding all of it and dealing with it. So I'm thankful to have been crossed all of that, but what we know right now is not exactly what was before, right? So we're happy to be live. We're happy to be trading at a very good premium, and we're happy to be treated as, now we're post-SPAC. We're not a SPAC anymore. We're a public company, and what we've treated today is similar to any public company, and we're happy to be able to perform. But in terms of being cheaper or faster, I don't think either of those is correct.
So it's a bit of a myth. Let that be clear to the audience as well.
There are pros that Youssef just said them, but those aren't pros.
Yeah, absolutely. Elie, I was actually going to ask the audience for a huge round of applause to congratulate you and the Anghami team on your listing.
Thank you. I mean, in the NASDAQ speech, the last line, I don't remember it exactly, but we can't wait to clap for everyone that comes next. So that's exactly what I want to do.
Starts, I think, with SWvl being on the panel. What I loved most about that, Elie, when that listing happened, and I think for everyone, our social media feeds were just Elie and his co-founder and the Anghami team at the NASDAQ, ringing the bell, and that moment, and it felt like it wasn't just Anghami's moment, it was for us all here, and that was just so wonderful to see.
It's a moment of pride for everyone.
A moment of pride, indeed.
I mean, whenever I think about it, I have goosebumps, proof, just like that. I mean, I can't restrict myself, but I was very happy, when I was walking over here, literally in step, especially yesterday, and people were just interrupting me to say, you don't know us, we know you, and just I need to tell you, you made us proud. And this was like from all walks, right? I've met multiple nationalities. I think the whole point is like, you can make it. And we have everything, our story is kind of very non-traditional. Anghami started from money we put, me and my co-founder, and then we took a loan from the bank. That is something that never happened. I don't think any startup that is alive right now took a loan from a bank and built a startup and got to IPO. And we did not raise that much money. All in all, I think slightly over 25 million. So the whole point is like, you can, focus and build and get there, and it doesn't need to be that complicated. Just need to build and keep on building. And I'm happy to prove that it can be done. And hopefully others are going to do way better and learn from what we did, the good and the bad. And we're open to learning. The ecosystem will not get better if we don't share the ups and the downs, right? It's not just ups. It's not all ringing bells.
And that's what we're here for as well. I would like to bring in Dr. Nabeel into the conversation because, Elie, as you were mentioning earlier, you started off with a bank loan, but thanks to people like Dr. Nabeel, for a lot of entrepreneurs now, they will have access to VC funding, to angel rounds, and that ecosystem has matured so much. If you're looking at the gentleman on the couch, if you're looking at all the exit stories that we've started to hear, including in Saudi Arabia, if you look at Jahez, VC-backed, listed on the stock exchange, how do you perceive that as an investor?
So first of all, actually, I would like to thank conference organizers for putting me in a panel with our heroes.
It's an honor.
I think this positive and hope for the whole region, actually for startups and entrepreneurs, that if we are doing it in the MENA region, exits, IPO, I can do it as an entrepreneur, homegrown, headquartered here across the MENA region. So I think that's very interesting inflection point in the ecosystem here and the journey of venture investment and startups. I think that's one thing I really would love to thank all our heroes, entrepreneurs, founders of these great companies, that they managed not only to build high growth companies, but also to get them into an interesting exit story, which is the IPO journey. And as we have this discussion with Elie and Youssef a few days ago, is that this is like, it's like not an exercise which is one size fits all. So definitely we will see different kinds of exits. It depends on the market dynamics, the potential of the growth of the company post-IPO, post-listing. That's very, very important. So as we saw Fawry listed in the Egypt market, stock market, Jahez in the local also market in Saudi Arabia. That was a great story, giving hope for all startups in the region, in different countries, but also the listing of startups actually internationally in the stock exchange globally. I think that gives also options and variety of exit options for startups. And I think the potential growth of the company post-listing it's what's actually helping the design of their exit, where to be listed. And definitely we will have different kind of stories post-listing. We'll have ups and downs, challenges. It's a new chapter of the journey of the startup. The second thing is actually, we will be seeing also dual listing. We will be seeing delisting. But that's the journey. I think they're going to be very, very interesting. But it's at least now, I believe it's a fluctuation point where actually things will be giving hope for other startups to follow their lead.
Absolutely. And do you think there is a very healthy pipeline? If you start looking at the hundreds of, because you've been investing in hundreds of startups across the MENA region, and do you think you're starting to see that maturity level being reached by these companies to actually go for that IPO, which is normally a bit larger in size and obviously takes a lot more effort?
Yeah. So I remember attended an online session via Zoom actually where Elie and the chairman of the Capital Market Authority in Saudi Arabia, Mohammed Al-Gouez, was on the same panel online, and you can compare this like 5 years back. If you're talking about startups getting listed in the stock market, that's unreal. Like unreal. Unreal. So I think even this, I would say, rapid transformation, and I think the pace of updating policies and procedures and among different local capital markets to catch up on the potential of these startups for their growth potential, for their economic impact, job creation, all these impact that can create. I think the tone is now different among these local authorities handling the capital markets across the MENA region. And I believe this is a healthy competition where everybody wants to listen. That's why they work a lot actually at the capital market in Saudi Arabia, specifically for the Numu market, which is the parallel market. So the main market is like dividends driven. Here it's actually the potential growth of the company post-listing is the key.
And speaking of the capital markets in this region, so when it comes to SPACs, I think they all had a look and realize, wow, we're losing out on some incredible companies that are going through the SPAC process and obviously going to New York, either the NASDAQ or New York Stock Exchange, because those are the mature markets. And so we've recently heard announcements by the EGX in Egypt and by the Abu Dhabi Stock Exchange in Abu Dhabi, obviously, that they're announcing, they have actually already announced a SPAC framework. So I'm just wondering, Youssef, do you think that this is something, because bearing in mind we've also already started hearing news about companies that are planning to set up a SPAC, and that's excellent news for the entrepreneurs that are sitting here because they will be looking for target companies, right? So do you think this will be of interest, or should companies be a bit more cautious because that market has not yet developed in our region, and this will be the start?
No, it would definitely be of interest, and I think first of all, it's phenomenal the speed at which the regulators in the region have reacted to this. Like if we take 10, 20 years back, if you have a new product products that have taken a very long time to come here, right? Now in no time, kind of the US has did it, a few countries have did it, and actually now Egypt and the UAE are becoming among kind of the first in the world to kind of really push on that. So I think that speed from a regulatory perspective has been phenomenal. I think the quality of the sponsors, which are now going out both in Egypt and EDX to list, are quite exceptional. So actually they're going to be really, really beneficial for the company. I think, as you said, it's great for the founders because now, in addition to the classic IPO, the SPAC on NASDAQ, the M&A, the VC, you also have a regional SPAC route. It's great for capital market investors because now you have one more instrument that you can invest in publicly that gives you kind of this kind of warrant, stocks, etc. So there's an upside. It's great for sponsors of VCs, of PEs, etc. because now they have one more vehicle to raise capital and deploy that capital. So every instrument to provide diversification, optionality, and different opportunities in the market is always a welcome development. I think it's going to do extremely well. Egypt specifically has a huge upside because of the very high interest rates in the country, which means SPACs are super attractive because even during that period when the cash is being held in trust for 9-12 months, there's no real opportunity cost because people put money in the bank anyway. So even during that dead money period, which is the main disadvantage of SPACs in the US, in Egypt that would be absolutely not a problem. And even kind of in the GCC, the utilization of cash is not generally 100%. So even if you kind of leave that cash in escrow, it's not. So actually, I think that's going to be kind of quite huge and quite rapid and really good in the region.
Spoken like a true investment banker, I must say. I hope everyone was able to follow that. If not, just put your hands up. Let us know what terminology was. Oh. we'll explain it in a bit. Thank you very much. But just to stick with that, Youssef, and before we go over to Elie, because Elie, I want to spend some time for the audience as well to really hear the story of Anghami, which I think is of a lot of interest for all of us. But just on the topic of SPACs, right? If there are any entrepreneurs and they're thinking about this is the type of route that I want to go through in order to go public, what advice do you have for them? What do they look for in a SPAC partner? Because if you look at, your SPAC partner, essentially, there was an incredible fit. There's the ESG angle. So how do you go about deciding that's the right fit?
So maybe we're starting from your point. One is kind of the fit from a culture and from a mission perspective, right? So for us, it's kind of an ESG play. It was a sustainability all-women SPAC, so it made sense, right? That fit and that cultural alignment is extremely important because one, it's the fit of the people you're working with, but it's also the messaging that you're sending to the market about who you are as a company, right? And the SPAC that you will choose to partner with is a reflection of who you are, and the market will take it as a narrative for where you want to be and what your focus is. Second is who are the kind of the sponsors of that SPAC and what strategic value do they add, right? So beyond just kind of being a conduit and the vehicle to get public, do they have high quality strategic investors in themselves that can either open doors for you in whatever sector you're in or can connect you with other high quality strategic and financial investors to come in. Third is ultimately the SPAC is just one piece of the equation, but obviously you have the PIPE, which is the very substantial piece of the equation.
I want you to explain that in the most simple terms you can imagine, because I think for a lot of people, they just hear PIPE and it's very difficult to understand, yet it's an important process
not the investment banking technology.
For sure.
Change the dictionary for using it.
For sure. So when you do a de-SPAC, there's two things. There's the actual SPAC, which is the listed entity which you're reversing in, which already has capital in it. And then there are additional investors who say, you know what, I like the SPAC and the company, I like this combination that's happening, let me put additional capital in. And that additional capital that's coming in addition to being a significant quantum of capital that's helpful, in addition to being certain capital that you know for a fact will come in, it's a very high vote of confidence in the sponsor, in the company, and in the valuation and the terms on which the deal are being done. So it's a massive vote of confidence. So it's very important to understand that the SPAC has access to investors and has credibility to be able to not only combine with you, but also source that third-party capital that will come in and revalidate and enforce how attractive the transaction is. One of maybe the kind of the technical disadvantages of SPACs that we haven't talked about is that the redemptions concept, which is the concept that
you're making it too complicated.
It's getting tricky, guys.
You're making it your audience, you read the room. Your audience can't understand all of that. Follow him on Twitter or LinkedIn, and he'll explain that with the formulas. It's kind of complicated.
So to answer your question, it's important to get a SPAC where the capital is real, where the capital will stay, and the capital is committed, not people that will just kind of leave at the end of the SPAC.
And this is also, ladies and gentlemen, why you need a good CFO. There you go, because that's the person that's... And to be honest, one thing I've noticed, yes, co-founders, you're going to be under a lot of stress, or CEOs, once you go through the IPO process. But many people underestimate what a critical role the CFO plays in this, because literally, when it comes to setting up the department of the finance and being able to meet the financial reporting, forming a part of that prospectus. I know in a SPAC it's a little bit different, but if we go the traditional IPO route, which is what I know most, they're really under a lot of pressure to make the IPO happen.
It's still I mean, he's working his ass off, I'm pretty sure.
Yeah. But smiling through it.
Yeah. Absolutely.
Right?
Absolutely. Life is good.
That's always.
That's always. Elie.
Yes.
I've really, ever since they said, on the panel, and Elie's going to come, and I know we have probably all read the story of Anghami. We've seen you're all over the place in terms of giving interviews, and you're very open about it as well for other entrepreneurs to learn about the journey as well as be inspired. I'm very curious to know, how did this journey start? Was this something you always had at the back of your mind? This is where one day I see myself and my co-founders and my company. And what was that process really like?
Yeah, I mean, we don't have enough time to tell the story of Anghami, but very briefly, we just did something because we wanted it. I mean, very honestly, we never thought we were doing something that is going to get to what it ended up being. We just wanted to genuinely to listen to music. It was 2010. We had to pirate. We had to go to Piracy site to download music, to put them on the iPod. And so that did not make sense to me, right? And me and Eddie, my partner. And so we started figuring out how we can solve that problem because I was bored from my previous company, right? So I'm generally, I don't want to get bored. I had time at Starbucks. So I was thinking every day how we wanted to build it. And we started building Anghami. And at that time, it's like, again, the VC concept was just starting. So we weren't aware that you could, do a VC, and whatever the concept of VC wasn't there. For us, at least. Why? Because my previous companies, I had raised them the traditional way, right? And like, you bootstrap, you take a loan, you find money, and you just, put in your profit into the business, and you grow it. That's what I knew. And exactly now is like people are hearing, like from Youssef and from Dr. Nabeel, like the opportunities of IPOs and SPACs. It's like when we wanted to figure out exit of Anghami after years of working, and because we really were conservative throughout so many different things, and we were, we had options. We knew, because when we signed the first deal with the first VC, we knew that we had to exit at one point in time. That was part of the, letter. So we realized exiting is like either we sell the company, which we got offers over the years, but we weren't satisfied. Me and my partner weren't satisfied of selling. It's like we said, okay, that's like a kid, raising a kid. You don't raise the kid to send it away. You raise him to try to really make him as good as possible. So for us, we said, can we get another chance? Can we still do stuff? And it just happened that our latest fundraise happened during COVID times. Literally, this roadshow was supposed to start 15 or 12 March 2020 in London. And then the banker called us, oh, we can't travel anymore because we can't accept you there in the offices and stuff like that. It ended on Zoom. So we started meeting people on Zoom and that was the advantage, that we hopped countries and continents quite fast, no traffic. But it was really bad, doing it via Zoom. It was the first time training to do a pitch on Zoom. It was like not exactly what I enjoyed. But along that line, we just met the SPAC sponsor. And they were into media, and now we realized that we had an option to either, do a private raise, again, like we're doing it, or we could do the IPO, which, we had to learn the terms, all of the terms that you didn't understand till now. We had to go through them, and way more, because we eventually started, we found that it's interesting because they were into media, the sponsor is into media, we're into media. And we realized that during COVID, I don't know whether a lot of you must have seen that, during COVID, when it was like really bad times to a lot, companies on the stock market were acquiring right, left, and center. They had something startups don't have, which was public currency. They had public currency that allowed them to issue stock and to acquire, and while that, because they were doing value, it was growing. Their value was growing, but the stock was growing, and it made perfect sense. On the other hand, all startups that did not have cash on hand could not grow, right? Because they couldn't do that particular, exercise. And we realized that as Anghami, we needed to exit our investors. So the exit would be, if we do an IPO, then our investor will have liquidity, and we will have also public currency, which we're using right now to grow, to acquire. And today, an hour ago, I think, we disclosed that we did something that the first time a music service did worldwide, I think. We acquired content from a top artist, and we took it off every streaming service, including YouTube, which hasn't happened worldwide. We took Amr Diab content, is now on Anghami exclusively. Why? This is a content play for us, because we will grow by increasing content creators. So what we want to do, we already funded a label with Sony. So to attract creators and to create content, we're going to be doing much more content plays, because we want creators to create content, whether music, whether podcasts, or anything. And to do that, you need money. You can't do that without putting money and without attracting artists to understand that the value of media is not in likes, is not in views. That does not feed anyone. What feeds is money, right? So to do that, we can't give content for free. You can't have content for free. People in the region think that music is supposed to be free. It can't be free, and that's why we don't have enough artists creating music, because content is free. We have 70 million songs on Anghami. Most of them are international music, English or wherever you want. But we have only 700,000 Arabic songs. We need to fund content creation. Hence, one of the things that we're doing right now with our stock, with our public equity, is literally funding and growing the content across the region. And that is part of why we did the SPAC, the IPO.
Fantastic. Well, all the best on the next chapter, because yes, it is a milestone, but that's only the start.
That's just a chapter. We rang the bell on a Thursday. It was a weekend, and Tuesday I was at the office back working normally. It's just another chapter.
Just a lot of congratulation messages coming in.
Yeah, I still some that I haven't replied to, sorry.
Are there any warnings you have for any potential companies or entrepreneurs that are going to take their companies through this route, from your learning and the things that, because it took quite some time, as you already mentioned, longer than you could have thought about. And what I also notice in my line of work is no matter how much you tell candidates, be prepared, this is going to take time, it's going to take a lot of effort, and you are never prepared. If you think you are IPO ready, once you go to an IPO readiness exercise and you start looking at your risk management, your compliance, your finance function, there are things that people don't even consider that are critical for a successful listing. So what lessons can you give to people who will follow your footsteps?
I like Youssef, I'm going to be speaking normal language for people to understand, right? It's like, but what he said makes perfect sense. When we started doing when we went into the SPAC process, it was, I think we announced it on 3 March 2021, right? So roughly, it'll be a year and a few days. So we are a startup. We're used to, I'm the co-founder that makes a project plan, that you're going to do this, you're going to do this, you're going to do this. This is how we're going to plan it. We're going to announce it on this date. We expected, because we planned it, that we're going to finish the IPO process by that particular time. Obviously, all of our plans didn't work. I can't speak on their behalf, but I don't
100%.
think... Yeah,
he's nodding along.
He validates that. Clearly, you have to, when we were told we should be ready and we need to be transparent and we have to have our whole house in order, and we really thought we have everything ready. It needs to be further ready and further ready. And we learned plenty of lessons. If anyone is interested, you can connect with me, and I generally answer everybody within a week or so, but I answer. So, and there are plenty of lessons, plenty of technical things that we did not expect, but we learned, and we come out of that, raising our head, and we're very happy where we are and what we learned. And the company will be forever different because of what we did. And the first time, when we decided to list, a few days later, I sat with Fadi Ghandour of Aramex, and he was the first one who did the listing. We were the second company that listed, the first tech company, but the second Arab company. Fadi had listed 27 or 28 years ago, and he told me he listed for 5 years, and then he delisted and listed back in NASDAQ Dubai. But those 5 years, in terms of what it taught the company, what it created in structure, processes, compliance, made what Aramex became later, and the same process still exists till the day. So I think it was a pretty good exercise, but I don't know whether I should say that, but I think most companies aren't ready to do that. It's very complicated process, and you probably are better off it's not supposed to be a target. When we were just before preparation on that NASDAQ day, and I was like, they were telling us what we should do and how to ring and whatever. And the woman just thought that we were telling me, now you're going to be one of 3,600 or whatever, something of that sort. One of 3,600 companies that are listed on the NASDAQ. And that number caught me. I never knew how many companies are on the NASDAQ, but the end is that few companies are on the stock market, on the NASDAQ stock market, tells you that must be quite complicated to be there. And I still remember that particular word. And it's but the value of being listed, we listed for a reason. We did not list because we want to, it felt as a target. The target is to continue growing Anghami and to get to the next chapter that we're working on right now. And that is what we're very happily engaged in right now. Thank you.
So Youssef, you're currently going through a very similar process at Swvl. And again, phenomenal story. Do you want to just recap how that journey has been for you? Obviously, Swvl, 5 years since it started, already unicorn status, going to be the second Arab tech listing on the NASDAQ. Hopefully, first two of many more to come. Can you tell us about the Swvl experience from that perspective?
Absolutely. So Swvl is a kind of very simple story, right? Is you have average in emerging markets, 1.2 people are on every vehicle. We take that to 12, so we cut the number of vehicles on the road by 10. The majority of our customers on the younger side are females, so kind of women can go to work and go to school safely. And third is governments lose a ton of money on public transport that they can now redirect to education, healthcare, and R&D. So basically building kind of a parallel mass transit system that allows kind of everyone, regardless of their income level, regardless of their gender, regardless of their location, to get to where they need to be safely and reliably. We do it in 115 cities in 18 countries. We operate all across Egypt, Kenya, Pakistan, UAE, Jordan, Saudi, Chile, Argentina, Brazil, Japan, and all over Europe. We operate in all forms of mass transit. B2C, you can download the app and book. B2B, a university, a corporate, or a school can book with us. Software as a service, a government agency can use our system to run their own public transit network. We run everything from the Barcelona suburbs to the
Who can repeat the countries you mentioned?
180.
So we run everything from the Munich airport to the Barcelona suburbs to the Tokyo kind of suburbs, etc. On Swvl, the idea for us is creating kind of that ecosystem. Back to the point Elie made about public currency. For us, that is the main motivation, right? Because for us, the vision is to create a holding company, an ecosystem that become an operating system for mass transit globally and allow every founder and every person who's trying to solve that problem anywhere in the world to roll up onto that platform, right? So whether we grow organically, we give people kind of stock options. If we grow inorganically, we basically acquire people, we give them shares in the top. So that kind of NASDAQ listed currency allows you to create this ecosystem where everyone around the world, so you're not only democratizing the transport, but you're democratizing the creation of that transport by all the startups around the world.
So you used it as well as what you were saying, Elie, earlier about this currency to be able to do acquisitions and grow your company. And what do you think, there are probably a lot of companies out there, and I deal with them regularly, that are wondering, is this the right time for me? And how do I know this is the right time to go to market? It's a very difficult question, but I'd be keen to hear your views about how do you make that decision?
It's always the right time to be doing something, right? It's just a question of what that something is and what the best thing is, right? So if you always need to be growing and you always need more capital to grow, to become more aggressive, to take it to the next level, right? So the only question is, do you care more about the public currency? Do you care about more public currency that you can give to people, that you can distribute very widely? Is that going to get you there faster? Or is a private capital where you can just focus and execute, etc., is going to get you there faster? So you should definitely be out there regardless, should be raising capital regardless, should be growing super aggressively regardless. The only question is a private mode where the process is faster, or is a public process where the process is longer, but the public currency you get at the end of it is more rewarding, and that is what will depend on the stage of the company.
And clearly, because of the current existing market, there were a lot of SPAC and IPOs who folded because the public market was quite red, right? I think right now we're better days, and I'm thankful of our stock performance, but there were times whereby we all doubted whether it's the right time to go to market. But clearly the market behaves like the market behaves. What will happen tomorrow with the Ukraine that happened, I mean, war that started, or it seems that started earlier today, is something beyond all of us.
Yes, please, Dr. Nabeel.
I just want to add that, as Elie and Youssef mentioned, like exit or IPO is the design process. So lots of subjectivity. So market conditions, market dynamics, the potential of the company to grow beyond listing is really crucial. We need also to remind ourselves that, like in the US, which is a more mature market in venture investments and startups, it's 80 to 85% only goes, 80 to 85% it's M&A activities, mergers and acquisitions, versus actually listing. So these are very few companies that will go into this. We're proud that this is happening across the MENA region, but again, this timing, what path for exiting is really crucial. Where to list, definitely we'll see more of international versus local. We'll see more into dual listing, international and local. And also, we'll be seeing also delisting activities, like what happened with Aramex. But I think, to make a long story short, I think if I have one thing that I say to entrepreneurs, so carefully and wisely actually design your exit and listen more and more and more to entrepreneurs that have been doing this across the MENA region, because they have been through a lot during this journey. Listen also to your early stage backers, investors, and also need to listen to the market conditions and market dynamics. So I think that actually helps you in designing a better way to exit and to do listing, and actually to follow up on the listing post the listing activities, which is very crucial and important, and it's going to be sometimes bumpy ride. And I know it's so the agility and flexibility we've been having before listing. Now it's more governance, risk, compliance, and investment bankers gets involved and public companies. So I think that's very important to just listen more and more to the I'd say 360 of alignment of interest also between the founders, the investors, and the potential markets that they want to scale their company.
I think that's an excellent point, that alignment, because a lot of times many entrepreneurs might also be a little bit under pressure from the existing investors to look for that exit, whereas they might as a company not be prepared. So you need to make sure that, again, from the beginning, have the right backing, the right support from the right VCs or right investors who will help to see that long-term vision and are not purely driven by making sure they get their money back as fast as they can.
And also, actually, these stories that happened in terms of IPOs, it's not only giving hope for startups and entrepreneurs and founders of companies, but I want to add also it's giving value and hope for early stage investors. So we're seeing now more angel investors being injected in the market, private market. Also, we're seeing early stage investors now getting involved. So I think that's healthy for the whole ecosystem. Definitely, this sector is about risk taking. So risks actually will continue to be there, but without people with guts like Elie and Youssef and all the entrepreneurs, the founders of Jahez in Saudi, Fawri, and all the entrepreneurs that actually managed to go into this, it's all about risk taking and continuing actually adding value to the whole ecosystem.
If we're taking risks, it's because of our teams who've been working hard to get us to where we are. So I have to take a moment to really thank all the teams, all the supporters, all the investors, all shareholders, and everyone who worked with us. Without them, we wouldn't be here. I'm sure. I'm talking on behalf of Youssef too. I'm sure without them, we wouldn't be here. So
and customers really, also.
Of course. But I'm starting with them. Thank you.
Gentlemen, our time is up. Thank you so much for being here. I hope that you continue to inspire the next generation of MENA entrepreneurs and provide the much needed funding for these businesses and entrepreneurs. Thank you all very much for attending this panel.
Thank you
very much.